Hello folks, welcome to Legacy IAS. In this video, we will be discussing a current affair topic presented to you by your faculty Sushma KP. So what is the topic that we are going to be looking into today? RBI's monetary policy may have slowed the demand. In this topic, we will be discussing as to why is it in news, what is the relevance of it to your UPSC, that is your GS paper 3. Finance Ministry's latest economic review as well as the key highlights on it. Now, look at this. Finance Ministry's latest economic review pairs growth hopes for this year to be around 6.5%. Now, this is very less compared to their previous prediction of telling it is going to be around 6.5 to 7%. That is, they have reduced it significantly. Why and for what is what we will be seeing through it. If at all you haven't subscribed to our channel, please consider subscribing to our channel and share it along with your friends. It will be helpful for them too. Let's get back into the video. Your Finance Ministry has held that a culmination of monetary policy stance and macroprudential measures of your central bank or RBI is the reason why there is slowdown. Now, this is coming just few days after your RBI had released a bulletin stating that the reason for slowdown presently is due to your extreme inflation coupled with slowdown. This is a difficult situation, rather a more tricky situation to handle, but there is hope. Meaning, the second quarter report highlighted to somewhere around 5.4%, but the economy will recover in your third quarter and fourth quarter. Now, this might come. Now, we are telling, yes, there is a recovery in the third quarter and fourth quarter is also seeing on the fact that we have a good prediction of bumper Rabi crop output. Second thing is upcoming festival season. All this might aid us to come out from the slump or whatever is described by your finance minister as temporary blip. According to your RBI, it held that the growth will recover in your third and fourth quarter to 6.8% to 6.5%, and your average headline inflation will be up to your 3.8% in the next financial year, and the growth will improve to 6.7% in the next financial year. Your Finance Ministry's economic review also spoke about your credit growth, which has slowed very badly. But one breathing and good factor is your RBI slashing your CRR or your cash reserve ratio. Where it has brought down CRR from 4.5% to 4%. Wherein the banks will have more money to lend it. Alongside your RBI, your Finance Ministry has also reiterated its stance on sustainable growth, which is very much needed. One thing your Finance Ministry is constantly highlighting is domestic perspective. If you see India, it is going to grow well. But there are certain international perspectives that you have to look around. For example, yes, the wars are now going, escalations is going, etc. But at the same point of time, we also having to look at your crude oil prices, where yes, the prices tend to fall down, but at the same time, consumption oil, the oil that you use for consumption, now the oil that you use for your consumption, now those prices are volatile, and also India's extreme dependence on imports for this consumption oil. This is where the price could create a volatility factor. Alongside this is your strengthening US dollars. This could affect the policy makers of the countries. This is your RBI bulletin where it says that growth to rebound in second half of 2024-25 link consumption to slower corporate wage rise, and flags dipping nominal GDP as hemorrhage. First and foremost, they are speaking about inflation dented consumer demand, which is stemming from low growth wage from your corporate sector alongside the erosion of purchasing power parity. Coupled with very slow and low private domestic investments. From India perspective, if you look also, there is a huge sharp so this is what is leading to the present issues in the second quarter. But again, as we discussed earlier, with upcoming festival season and the expectation of a Rabi crop to be hitting the bumper season, and at the same point of time, with the slashing of CRR, the cash reserve ratio, there will be more money in the people's hand is what they are expecting. At the same point of time, they are trying to boost local investment. When we say local investment, boost to your MSME sectors might boost to your MSME sectors coupled with increasing rural consumption demand. We might see a breather in the scenario. So this is about the review of your finance ministry. We've reached the end of the content. If you like our content, subscribe to our channel, hit the like button and share it along with your friends. Thank you.